What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting method and the trading method we use can be implemented with any company that's traded in the US stock market. So make sure you hit that like button if you enjoyed this video. It really helps the channel grow. We really appreciate those who continue to tune in and give us that thumbs up. If you haven't already, make sure you hit the subscribe button and the notification button as well. That way you are alerted when we release new videos. We do release bonus content from time to time, so you want to make sure you're notified of that. Now, the nightly and weekend videos, like tonight's video, focus on identifying the triggers and targets for trades ranging from intraday scalps and short-term trades to long-term swings and leaps as well. So if you want a deeper dive into exactly how we set up our charts, how we set up the trading levels, the broadening formations, things of that nature, make sure you check out the bonus content on our YouTube page. Make sure you also check out the description of this video for more free information about the strat, which is the base of our charting and trading method. But I do encourage you to basically watch the full video because along with triggers and targets, we do give good insight into the price action on all different time frames. So with that, let's go ahead and get into the agenda for today. We will go ahead and recap the price action from Friday, November 28th, the intraday price action, that is. Then we'll zoom out like we always do and look at the week, month, quarter, and year. Then we'll zoom back in. Before we zoom back in, we'll take a look at the market maker's expected move for the week coming up, the week of December 5th. And then we'll zoom back in to look at the 4-hour markers and the triggers and targets for Monday, December 1st. The triggers and targets for the full week of December 5th, and we'll review the triggers and targets for the month, quarter, and year. So let's go ahead and take a look at Friday's intraday price action. It was a shortened session, and day after a holiday, so didn't expect a lot of volume, but with low volume can come high volatility. So, we did see actually a decent move on Friday, even with the shortened session. So if you're not familiar with this channel, we have a pretty simple, proven and repeatable strategy that we use to trade, especially in the early morning, close pretty basically when the first 10-15 minutes of the market being open. I'll say 10 minutes to an hour, because sometimes the morning can start off rather flat, and even for the beginning of the full day move might take a while to get started. So basically what we look for is higher lows at or above the opening print. The opening print is the first traded price of the day. So if we're looking to get price action to the upside, we want to look for higher lows at or above the opening print, and we want to get calls. If we get lower highs at or below the opening print, that's where we want to look to get into puts. And if we get calls, the targets for those calls, if we get that higher low at or above the opening print, the first target is the overnight high, and the second target is the previous high a day, or vice versa, whichever one comes first, right? If the overnight high is a lower price than the previous high a day, then obviously the first target's going to be the overnight high and then the previous high a day, but sometimes they can be reversed. So it's whichever one comes first is the first target, whatever one comes next is the second target. If we're looking to get price action to the downside, or if we get a lower high at or below opening print, we want to get puts, and obviously the targets would be the overnight low and previous low a day. All right, so let's take a look here at Friday's price action. This is on a 5-minute time chart, and we can see that we had the opening print. We initially pushed down in that first 5-minute candle. The second 5-minute candle we pushed up, but you see the wicks on both of them, so it's still basically indecision, two dojis, right? It was the third 5-minute candle that gave us the direction, at least early on, right? So this is the higher low, and we're essentially at the opening print level. If we bring in price action from Wednesday, because the market was closed Thursday, but if we look at price action Wednesday, the end of Wednesday, right, here is the low. So here is the higher low in the trend chart, or trend count, essentially, or starting the trend, right? So there's your first higher low. You get into calls, as soon as we break above the high of this candle, right? So we did jump into a few calls. Didn't want to trade too heavy on Friday, actually, but we did jump into a few calls for December 5th. We do already have calls for the December monthly and January monthly. So again, with the low volume and possible higher volatility, we didn't want to go too heavy on our trading on Friday. So we did enter on a few calls here. You can see obviously we got the higher high, a higher low. We did get a lower high, but it was followed by a higher low. So it was just some consolidation in here, right here. But we did go ahead and set our stop just below the higher low. But again, luckily we did get a higher high. We pushed up to a higher high, higher low, higher high, higher low. We had another situation here where there was a bit of consolidation, right? We got the lower high, but it was followed by the higher high. So just consolidation, higher low. But then that popped us up to the higher high. And we did actually stop out right here when we made the lower low, right? We kept moving our stops up just below the higher lows. So once price went below this higher low, we did go ahead and stop out. That does mean we'd missed this little squeeze here towards the end of the day, but that's all right. We had made our money on the scalps that we had. Again, we have contracts for December monthly and January monthly. So although we missed out on this pop from a scalp perspective, it did nothing but help out the swings that we have, right? And you can see this 15-minute broadening formation acted as resistance for the whole day moving up, right? It was basically associated with the overnight high and previous high a day here at the beginning of the day. So you can see how that, all three of those acted as some resistance. Once we were able to break above that overnight high, previous high a day mark, again, as we moved up, that 15-minute broadening formation just continued to act as resistance. Now, it didn't reject, right, in the sense of price rolling over and we went, fell back below overnight high, previous high a day, right? So that's more of a bullish signal. And then you can see at the end of the day, basically everybody was done, all right? Price just flattened out and trickled off into the afternoon. So, good day for a shortened holiday trading session, right? That's your day after holiday trading session, right? We couldn't ask for too much more from that. We got some decent profit. We didn't leave any runners on the group of scalps that we had grabbed. We just went ahead and sold all of them here and just took the rest of the day off to relax. We had some family in town, so we're able to enjoy some more quality time with the family. And yeah, basically let the day kind of drift off and come back to the charts, at the end of the weekend and take a look at everything. And that's what we're doing here. So, Friday, decent action. Hopefully if you were trading, you were able to get on that action as well. If we look at the 4-hour chart, just bring that up. We like to, again, continue to zoom out every once in a while or not every once in a while, but every day, just to make sure we have a level set of where we're at from a higher time frame perspective. So not even that much higher time frame, just the 4-hour time chart. You can see, didn't even put in a higher low, just continued to push up through the end of the day on Friday. Well, kind of hung sideways, but stayed up towards the top of the candle, the first 4-hour candle of the day. Right, so we can still pull back, right, and set a higher low. We obviously have the gap from Tuesday to Wednesday that we have on the chart still here, and that could be what our pullback is. Even if we fill that gap, we're just basically retesting last week's 50% level. If you're not familiar with this channel, the purple marks are weekly marks, or marks that are major on the weekly time frame. Right, and we always mark out our high 50% and low of the previous week because those are major points of inflection. Right, we obviously didn't go higher than the high from last week, so that's a reasonable point of resistance. And if you just look to the left of the chart, you can see it is a decent level of resistance / support. Right, so we could get the pullback here, go fill the gap. It wouldn't be the end of the world. We could get all the way down to this 32 level before we set a lower low on the 4-hour time chart. So, right, just continuing to stair step higher. If we look on the 1-day chart, let's get a little cleaner chart here. Right, we've obviously, make this bigger for those on the phone. We've obviously got past this, higher low downtrend line on the day chart. There was a steeper one that we broke with the gap up, but we're obviously handily above that. We have got the month markers moved as well, because then starting on Monday we will be in December. So we know that we're right at about the 50% level of the previous month, and that if we can continue to push up, then obviously that's bullish. But if we're starting to fail again here, right, this could be the resistance point that we were talking about. Could get more sideways action, even after we've had this nice little bounce from the pullback that we had over the previous 3 weeks. Again, we need to watch out, right? We did bounce. If we look at this from a week perspective, zoom out a little bit more here. If we look at it from the week perspective, right, last week locked in the previous week as a higher low. Right, we popped out of this 11-week range after the bull flag that we were in. Oops, let's go here. You see the bull flag, the flagpole here, the actual flag going sideways here, and we got that pop, right? So now we got the pullback from that pop. We're bouncing off of the year flip, right, keeping the year green. We pushed back above the quarter flip, so the year and the quarter are green. Like I said, we've got a new month on Monday, so we've got to see where that opens and whether we're going to maintain a full time frame continuity to the upside, meaning the month, quarter, and year are green, right? We want to continue to push up, but we're really we need to make the higher high on the week. If we don't make a higher high, then we're obviously for the time being consolidating, right? Because we're coming from a higher low. If we make a lower high and start pushing back down, it's more of consolidation. But if on that push down we break below this low, then that starts the downtrend. So I'm not calling for that right now, but I'm just want to remain cautious, right? Last year's 50% level is a point of resistance for us. If we just go back to the day chart and look at that, see it was resistance. It was support for a day, but we fell back below it, and it was resistance. Resistance intraday, resistance, relative resistance here. So last year's 50% level is going to be a major point of inflection that we've got to get over. And you can see how this weekly broadening formation, this purple diagonal line, does kind of coincide with that last year's 50% level here. So I do see that as being the major level of support of resistance that we do need to break through. Once we break through that, then obviously we continue the march up. Got a couple gaps above that we could go fill on the way to that 70.08 possible target that we wanted to see, right? But again, from the week perspective, we have put in a higher low, and everything is looking good there. The month, let's go there. If we go to the month chart, something a little, there we go, get the broadenings out of there, right? So we can see, obviously, not last month because it's about to be December, but in October, we set a higher high, right? It was higher than this high, and in November, we did have that pullback, but it looks right now as though that could just be a higher low being set in. There we go. Yeah, a higher low here in November, right? If we go 2 up in December, that locks this in as a higher low, and that's just continuing the trend count on the way up to this 70.08 ultimate target. We say that 70.08 is that ultimate target because if we go to the quarter, right, we can see that we went, like this a little bigger for those on phone. There we go. We see that we went 1 combo 2 down, combo 2 up. If you're not familiar with the strat, make sure you check out the free content in the description of this video, but that is a major reversal, right? And when you go 1 2 down 2 up, or combo 2 down, combo 2 up, the magnitude of the move is not the high of the one, but the candle to the left of the one, and that's where that 70.08 comes into play. It would complete the one combo two down, combo two up strat, and on the quarter and on the year, right? Because we talked about it will most likely take more than one quarter to finish that strat and get up to the 70.08. If we just continue to push up through December, get rid of some of this wick on the top of the year candle, and finish up here, then the start of 2026, we have just that much easier chance to go two up on the year, which would trigger a two down, two up, and that magnitude is 70.08, right? And again, we talked about this year we triggered the one, two up, two down, but we're able to reverse it before making magnitude, right? So the magnitude of that move would have been that 621, the low of 2022. But we were able to bounce in April at 723 and push up. So that gives us a higher low in the trend count on the year chart as well, right? So not a lot to worry about from a higher time frame perspective. We talked about this over the past few weeks, really, even during that 3-week pull down that we had over the past 3 weeks before this past week. We talked about it. It's not going to be the end of the world. We do have plenty of room to put in the higher low. And, we can continue to go from there, right? But for all intents and purposes, nothing has broken down. And, we're looking decent. We made a pretty good comeback over this past week. And, locking in that higher low is what I was most excited about on the week perspective, giving us the potential to lock in a higher low on the month perspective, right? If we do that, that's pretty major. So we want to continue that push up, get a higher high on the week chart, locking in the higher low on the week as well as the month, and we just continue to push up, so hopefully to that 70.08 magnitude, right? So let's go back to the charts here and look at the market maker's expected move, high and low. Let me pull out. I should go to a 4-hour, maybe make it a little bit easier here to do tomorrow. There we go. So we can see the price action that we've had over the past few weeks, right? And if we go to our options chain for SOXL, I'm using Thinkorswim. If we go to the options chain and we look at the options chain for December 5th, if we go all the way over to the right over here, there's a number in parentheses, plus or minus 4.178. That is the market maker's expected move. That's calculated from basically a strangle on the at the money and in the money options calls and puts. I said I was going to do a bonus video on how to calculate that, so I will do that soon. But essentially what you need to know is that the market makers expect a plus or minus $4.18 move essentially for the week. So with the close price of 41.26 on Friday, right, you add 4.18 and subtract 4.18 to that to give you a range of 45.44 and 37.08. Right, so that's the market maker's expected move for the week of December 5th. Now, again, the market maker's expected move is not an end-all, be-all. That doesn't mean that if price makes it to this point, it has to reject and push down or stop and move sideways. That's not what happens, right? You can easily go above or below the market maker's expected move, but for the most part, about 70% of the time, price does stay within that range, right? So you do want to have that on your chart and know where it's at, because in this particular case, right, it falls in between the 100 fib extension of the bull flag from April and the last year's flip. So from an intraday perspective, you'll want to know where that level is at, right? We could have a rejection here intraday before pushing up to this level the next day, or just anything like that. So you do want to make sure you have the market maker's expected move, and more often than not, they line up with major levels of support and resistance anyway. You can see here the market maker's expected move low is basically the top of the gap. We've talked about many a times how you can bounce off of gaps, especially intraday. Although gaps are magnets, right? They do usually attract price. A lot of times intraday they can be bounce points, and actually, yeah. This is where we bounce to make the higher low on the week, right? We had this gap out here from a long time ago, back in the 11-week range in August, I believe. What is this? Oh, this was September. Yeah, end of August, beginning of September was this gap, and we bounced right off of it. Right now, you can see how it coincides with the year flip, but it just that year flip being there just proves that this is a stronger point of support, that the top of that gap there, and we bounced basically off of it to the cent last week. So you can see how those market maker expected move low is coinciding with the top of this gap here. All right. That's how you get the market maker's expected move. Let's go ahead and move into the our expected intraday price action for Friday. All right, we've got for Monday. Oh, goodness me. For Monday, December 1st. We can see we've got the major 4-hour markers on the chart here. The 4-hour markers are previous high a day, overnight high, overnight low, and previous low a day, right? So PLOD, obviously previous low a day, PHOD, previous high a day. Those are in orange, signaling those are for the day chart. So obviously those are previous high. The dashed light blue line for this H and L, those just mark our overnight high and overnight low. Those should change. Those overnight high and lows were as of close on, about an hour after close on Friday. So let's just, not down, activate low. Let's just say overnight low ends up being here, and we'll just say overnight high stays there, right? So on Monday, to follow our proven and repeatable strategy, right? We look for we look for higher lows at or above opening print, and we look for to get into calls, we look for higher lows above opening print, and to get into puts, we look for lower highs at or below opening print. So let's say we open somewhere in between overnight high and overnight low on Monday. First traded price level is here. If we push up, maybe get a rejection off of overnight high and pull back, but we get a higher low at or above this opening print level, then we want to look to get into calls. First target obviously is overnight high. Not a lot of magnitude there. Probably won't let go of any contracts there, even if you do buy in the money calls. But the second target for this scalp early in the morning would be the previous high a day, right? So decent amount of distance. If we were to open here, that'd be about $1. So definitely if you've got something at the money, in the money, multiple contracts, you can get yourself a nice chunk of change if you get that move from opening print to previous high day. Same thing on the downside, except for there's more magnitude to the downside, right? So if we open here, we push down, say we bounce off overnight low, we push back up, but we reject and we get a lower high at or below that opening print. Then we want to go ahead and get in puts, right? So if we push back up, we'll get a lower high, get a put or puts, depending on what your account looks like. And your first target is going to be overnight low, but your second target is going to be previous low a day. So you can see how there's a lot more magnitude to the downside that could be had, right? That's what you can do for scalping, especially early on. Those are also good ways to get just entries into full day trades as well, or swing trades, right? If you're expecting that price is going to continue to go up over the next couple weeks, next couple days, right? The proper triggers have been triggered. We'll get into those 4-hour and 1-day triggers here in a second. But if those trigger, you don't need to just hit scalps. This can be how you can get a great entry for, a full day trade, overnight swing, and just continue. If you get that higher low at or above opening print, and you get that call and price reaches previous high a day and continues to go, you may unload part of your position here, but then we can flip to the 4-hour and day triggers and targets to extend your what started out as a scalp into a full day trade or overnight swing trade, right? Now you want to make sure you're waiting for triggers to trigger. You're not just swinging what should be a scalp, because that can be a great way to lose your profit. All right, you got to continue to look at the chart and make sure that the proper levels are being triggered and honored, stayed above or stayed below, right? So we can see on the 4-hour time chart, let's make this a little bigger here. Right, on Friday, we had that 2 up and then the high 1 where it just kind of pinned everything at the end of the week. That was, the high of the week as well. So if we go to the upside, there's not a lot of magnitude for the 4-hour move, but on the day, we could go up and see this gap fill. Now to the downside, like we talked about on the 4-hour, we could get a 2-1 2 down reversal. That would trigger at the low of the 1, and the target would be the previous low a day. Make this a little bigger for those on phone. Right, so if we go below the low of the second 4-hour candle, well, quote unquote second 4-hour candle of Friday, even though it wasn't a full 4-hour candle, then right, we've got the trigger here and the magnitude here, which lines right up with last month's 50% level, which again is a major point of inflection. So that could be where we bounce. You can see that daily downtrend line that we drew. We're not totally above it, right? I would like to see a higher low above that level to really confirm that we've broken it. We could still get pulled back below it, and you can see why. That downtrend line, coincides with last month's 50% level, which could act as resistance and put us back into either a range or just start pulling us back down again. So from the 4-hour perspective, from just a pure strat perspective, the magnitude is to the downside, but we are in this uptrend. So, even if we do get that downside action, I would be wary about the price going any lower than the previous low a day or last month's 50% level. If we look at the day chart, right, on Friday, we had the 2 up. So if we get more action to the upside, it's just a 2 up continuation. Obviously, the gap fill is going to be that first target. And then we're looking at the 100% fib extension of the April 7th bull flag as our next target, right? That's getting us closer to that market maker's expected move high. I don't expect to get there all in one day, maybe not even 2. So we would have to see sustained pressure to the upside to break that and last year's 50% level. We've talked about that previously, but for right now, we do have this gap up here that could continue to pull us up. But just as the top of the gap below us could act as a bounce point, the bottom of this gap right here could act as a rejection point. So just want to continue to watch things. We don't have a reversal to the upside. It's just continuation. To the downside, obviously we have a reversal. It would be a 2 up, 2 down, entering at the low of Friday, and the low of Thursday would be the magnitude for that move. Again, obviously the extended targets would be the gap close here, but that is the bottom of the market maker's expected move right here at the top of this gap. So we could see that bounce, right? And again, that puts us in a nice position to just go sideways for a little while as well. Maybe we need to digest this bounce that we had over the last week. Obviously, bulls want to continue that momentum and continue to push up, but right, you can see how we had sideways action here for a few days in the beginning of October, actually a couple weeks. So this could be, another sideways action, right? So we've talked about how nothing's broke down from the week and up. Well, the day has, changed its trend from down to up. So we just want to continue to see that. And, right now we're looking at possible full time frame continuity to the upside. If Monday opens up green, that would be the day, the week, the month, the quarter, and the year that are green. So bulls just trying to continue that momentum to the upside. Now, if we do get that pullback and we get that gap close, that also puts us in a 3 combo 2 up, combo 2 down, which should bring us back to last week's low, right? Which again, it's not the end of the world, even on the day chart, right? That's just putting in an equal low, if not a higher low, if we bounce just a bit above that. So that continues the day trend to the upside, and we just have to make sure that we don't make a lower high. Even if we do make a lower high, if it comes after the higher low, then we're just looking at possible consolidation. So again, this was a range where price did move kind of sideways for a while, so don't be surprised if we get some sideways price action. But for right now, the day trend has flipped. Right. Let's just go back to the our notes here and just look at the hard numbers. We've looked at the charts quite a bit. For Monday, December 1st, there will only be 21 trading days left in 2025 on Monday, right? So just keep that in mind. You want to finish out the year good, right? The close on Friday was 41.26, and with the 4.18 or $4.18 plus or minus move expected by the market makers, that gives us a range of 45.44 to 37.08. All right. We obviously know where the gaps above and gaps below are. And we talked about from the scalping perspective, we want to look for higher lows at or above opening print to get into calls, targeting overnight high and previous high a day. And then if we go to the downside, we want to look for lower highs at or below opening print, targeting overnight low and previous low a day. Right. From the 4-hour chart perspective, if we do get price action to the downside, it's a 2-1-2 reversal. Again, we talked about there's more magnitude to the downside. That does trigger at 41.02. We have reversed the trend on the 4-hour and 1-day chart, so the magnitude of that move is a decent size for SOXL. So if we do get a pullback, but it's just going to be a higher low, I would expect the bounce to be around 40.15. If we don't bounce there, then obviously the magnitude of the 2-1-2 down is 39.25. So that would complete the move from the 4-hour chart. To the upside, again, remember not a lot of magnitude there. The 2-1-2 up triggers at 41.29 and only has a magnitude of 41.55. But we do have the extended target of 42.37 above us, which is the bottom of that gap, right? From the day chart, if we go to the downside, that gives us a 2 up, 2 down reversal, triggering at 39.25. The magnitude for that move is 37.30. I don't know why I put yeah. So I remember why now. Because of the gaps to the downside, right? Just the initial move, 2 up, 2 down, triggers at 39.25. Right, intermediate target at 38.77 because the move again is about a $2 move to the magnitude, and so we've got the possible bounce point. If we do start getting momentum and we hit that magnitude, that triggers another combo 2 up, combo 2 down with the magnitude of 36.45. So that's just if we really get moving to the downside. Those are going to be our extended targets here. To the upside, we would have a 2 up, 2 up continuation, triggering at 41.55 with targets of 42.64, 42.85, 43.37, right? So you got your gap levels here and then the extended target here, right? We talked about the week chart. We did set the higher low last week or lock in the higher low last week by going 2 up. So if we were to go back to the downside, that would give us a 2 up, 2 down reversal, triggering at 32.05 with a magnitude of 28.12. And we've got our extended targets here, 26.57 and 23.80. That 23.80 is where we'd make an equal low, or if we went below that, would be a lower low on the week chart. And that coming from a lower high would actually start a downtrend on the week. So if you're a bull, you don't want to see that level. But we have to recognize that we could be starting a downtrend. So look out for that 2 up, 2 down. If we do go 2 up on the week, right, that's just a 2 up continuation. That triggers at 41.33. And we've got extended targets here of 43.80, 45.52, 46.79, and 47.78. Don't expect to get to any of maybe the 46.79, but if we were to get up to that 45.52, that would be a very decent move for SOXL. And actually, if we look at, that would be getting up to the top of the market maker's expected move. So, it's obviously we could push above that, but we here at Bullish Chips are looking at that 45.52 area as the ultimate target for the week, right? Obviously, we would welcome anything above that, but that's what we are looking for. Now, we're also coming into a new month, right? So we shake off November's pullback. We got that good bounce at the end of the month. So we did go 2 up. I'm sorry, failed 2 down, right? We went 2 down on the month, but we pushed back up, kind of hammered back up, and we're looking to lock that in as a higher low. Now, if we do continue to the downside, that would extend this 2 up combo 2 down that triggered at 28.12. So obviously we would have to get back down to that level, which was quite a ways away. But SOXL is a triple leverage product, so it's very reasonable to think that we could make that, especially with a full month's time. So if we do get down to 28.12, the targets, intermediate targets on the way to magnitude are right here. And again, the magnitude for that move is a decent sized move and would be giving us an equal low. That's the reason why we give these intermediate targets on the way down, right? Technically, we're still in an uptrend on the month, the week, the day, the quarter. So, we've got these intermediate targets because it would be a feat to turn around this push that we've had and go make that lower low on the month level. If we do do that, then obviously that rolls into the quarter. We would no longer be in this one combo 2 down, combo 2 up, right? Because we would be below that 36.15 level. And we would really be looking at possibly, not possibly, it would re-trigger the 1 2 up, 2 down on the year if we reach that 23.50 level. And again, the magnitude for that reversal, it was 621. We never actually made it there. We reversed at 723 back in April. So if stuff really hits the fan and the rug gets pulled, or however you want, whatever phrase you want to use, and we move back to the downside with momentum and velocity, we could see that 621 level. I'm not calling for it. We're not calling for it here at Bullish Chips, but that is what could happen, right? So again, I'm not bearish. I'm neutral at worst at this particular time. My partners agree. They're not very bearish at all. I'm probably more of a bear than they are in our discussions, but at the same time, I'm not bearish. I'm neutral, right? We've got the quarter and the year that are green. We're starting a new month, so hopefully we can start that out green, right? Giving us full time frame continuity back to the upside after that little pullback in November. Making that higher low on the month time frame is what I'm looking at. If November was just a higher low, we're all good. And we don't need to go to the moon here in December, as long as we can maintain bullish consolidation up at the levels that we're at, and slowly continue to creep up. That's all you can really ask at that point if you're a bull, right? I do think 2026 will be a pretty good year. So just trying to see how this last month finishes out. Got to continue to have the patience that we had over the last 3-4 weeks. It really paid off, and things are shaping up how we would like them to. Again, we don't predict. We don't get into guessing. We don't say, we're going to be at this level at this time, right? It's just doing what we would hope it would do. And then we make sure that we have triggers and targets both to the upside and downside, so we can capitalize on whatever price action decides to do, right? So there you have it, the triggers and targets for everything from a scalping perspective all the way up through the 1-year chart. Tried to jam in as much information as possible without taking up too much of your time. So we do hope you enjoyed this video. If you did enjoy the video and you made it this far, go ahead and give us a thumbs up. Doesn't cost anything. And it really helps us understand how we're helping and where we're helping people. So along with that, it does help the channel grow, and we want to just continue to spread the word about SOXL for anyone who's never heard of it before. It's been around for years, but there's plenty of people that have never heard of it. But also we want to spread the word about our trading and charting method, the strat, the nuance to the early morning trades, things of that nature. We just want to help people win out there. So a free thumbs up goes a long way. We don't charge anything for the channel, and we do enjoy the discussions that we have in the comments with a lot of people, and just appreciate you guys tuning in. So just want to say thanks once again. We hope everybody enjoyed their holiday weekend. Hopefully there was good time spent with family, and got some rest. Really, that's the main thing, getting some rest coming in towards the end of the year. We've got 1 month of trading left. However, much trading you want to do is up to you, but we do want to finish out the year strong. It's been a great year for us so far this year. Just want to continue that going. So we will end the video like we normally do. If you're watching this Sunday night, we hope you get some good rest tonight and wake up refreshed in the morning. If you're watching this Monday morning, we hope you got some good rest and had a great holiday weekend, and you're feeling refreshed this morning, ready for another great day of trading, and we look forward to seeing you guys out there.